Okay, good morning, everybody. How we doing on this fine Thursday? Hope you got a good night's sleep. Had a great day yesterday. Got to go celebrate my brother's birthday. Got to make some money in the market. Right, bank stocks did their thing. The longs on bank stocks doing really well. A few of you guys in short term options on bank stocks as well. And then we had GameStop for a little funny LOL action. GameStop go crazy for us as well there. So exciting day yesterday, and looking to kind of continue that now that we have Powell done. Right, he pretty much did what we expected him to do. He said what we expected him to say, and we had the market that pushed as a result of that to new all-time highs. Apple at new all-time highs, at $1 trillion in value. Right, and yes, there are all these stocks that are at new all-time highs, but there are plenty of stocks who are nowhere near it that you still have the ability to take advantage of. That's the coolest thing about the stock market. There's always something going on, right? So everybody gets hit with this wave of like sadness. It's like, oh no, Apple's at all-time highs. I missed my chance again. Still plenty of opportunity, right? Still plenty of opportunity for stocks that are still breaking out, right? Still pushing. I mean, banks had a day and a half yesterday. That was one of the sectors. They're still, waiting for their turn, that you can still hop on. So in terms of diving into things, we're going to dive into today's news, but we're going to do so with intention. So make sure you drop a one in the chat signifying your intention to get 1% better by the end of this session, right? And that's exactly what we're aiming to do. So let's dive into it. Top news, dovish pivot. It finally looks like the Federal Reserve's rate hiking cycle has come to an end, as the central bank's policymakers signaled that more rate cuts could be in store next year than they had foreseen in September. The Federal Open Market Committee maintained its key policy rate at 5.25 to 5.5%, as widely expected, but it still kept the door open for additional firming. So basically, they said, hey, we're keeping the policy rate at the same level, but if we need to, we can still raise rates, which is kind of just, I don't know, like a little caveat, but something that the market didn't really take as seriously. Traders cheered the Fed's revised expectations, with all three benchmark indices ending around 1.4% higher each, while yields plummeted. Dot plot Fed officials now expect 3 rate cuts next year and 4 more in 2025, according to the summary of economic projections. While the new projection implies fewer cuts than what the market priced in, it means the Fed is moving closer to easing. In the September median projections, policymakers had forecast one last rate hike in 2023, followed by 2 cuts in 2024. Most FOMC members expect the key rate to fall within the 4.25 to 5% range next year. Now, in terms of Powell's speech, Fed Chair Jerome Powell remained cautious in the post-decision press conference, saying the Fed is just at the beginning of discussing policy easing. He noted that inflation is still elevated, although it has eased from its highs without a spike in unemployment. Powell reiterated that incoming data will determine the Fed's decision on how long it keeps rates restrictive. Quote, he acknowledges that it is premature to declare victory, but this FOMC meeting gives off a strong sense of investing group leader Sestrian Capital Research. In terms of seeking alpha commentary, quote, despite the message of caution from the press conference, the Fed has clearly taken a dovish tone here, said seeking alpha analyst Jeremy Lakosh, adding that the economy needs to achieve a significant disinflationary milestone or significant disinflationary milestones over the next 12 months. Wolf Richter noted that the FOMC statement toned down the chance of additional rate hikes, but left the door cracked open just in case. Meanwhile, ING Economic and Financial Analysis thinks the Fed will end up being more aggressive on rate cuts than both they and the market are currently expecting. So this is how it is, right? They give us an inch, we take a mile. The Fed didn't say anything extremely dovish, but the fact that it didn't say anything extremely hawkish, kind of by default made it dovish. Because so far, I feel like the rhetoric has always been like, we're staying firm, we're not dropping rates, we're doing what we need to do. We still have room to go. The economy is still robust, right? It's been super, super, super hawkish. So at the moment in which he stops using rhetoric like that, things become kind of by default dovish. And that's really where we're at with things on this fine December morning and on yesterday with that fine December Wednesday. So in terms of, kind of what we've got going on here with the Fed, this is what people have been wanting to see. Is this something that will be best for the long term? I don't know, right? The whole fear is that we drop interest rates, demand skyrockets again, inflation skyrockets again, and we're right back in the same spot. The democratic system is that whenever you serve terms, there's always in which no one cares what's good for the long term. They just need to get reelected. So, regardless of what's good for the long term, this is one of those things where it's like, looking inside the Biden presidential campaign, they're doing whatever they can to get back in the White House. And then if they have to deal with inflation afterward, they'll deal with inflation afterward. Right. But this is one of those things where they're going to keep pumping that oil, keep those prices low, try and cater to us as consumers, which I'm not mad at. Try cater to us as much as possible leading into that election. Yeah, buy my vote, pander for my vote by all means, right? If you feel the same way, drop a 3 in the chat. Do whatever you can to line my pockets to vote for you. And yeah, we'll see what it's looking like in November. But at the end of the day, that's what it is, guys. Everybody here is they're trying to secure their own bag. So make sure you can get whatever you can out of whoever is in the White House, regardless of what party. At the end of the day, there's only so much either party can do, right? It's going to come down to you and what you do. So yeah, go ahead and pander to me all you want. But we'll see how that works out for the long term, right? We'll see how it works out, and if rates will just have to be lowered again, and this just drags things out for longer. I don't know, but I'm sure this is a welcome development across the board for a lot of different people when it comes to rates going down. Possibly, I was seeing reports that there are like divorced couples that are still living together because they can't afford to leave because of interest rates, which is just again really tough. That's why no matter what position you're in, you always want to make sure that you have your money working hard for you, because you don't know what life will throw you, what curveballs will happen. That could happen if I had to divorce somebody and I'm still living in the same freaking house as this person. So make sure that no matter what happens, no matter how high rates are, you can go out somewhere and rent, go out somewhere and do XYZ, but you don't have to stay in a house with somebody that you just ended that commitment with because of interest rates, right? I'll be darned if I'm going to let Jerome Powell determine where I spend my time as a human and who I spend it with. It's crazy. So I just got to make sure that no matter what, again, it's you versus you, me versus me, making sure that my money's working hard, and that when news like the interest rate news of yesterday comes out, I can do things like double my money, like we did on GameStop, and like those longs getting pumped up that we talked about on the bank stocks, SoFi, etc. In terms of automotive news, autopilot recall. So Tesla is recalling more than 2 million vehicles after the National Highway Traffic Safety Administration determined its autopilot driver assistance system does not go far enough to keep drivers engaged. The recall follows the NHTSA investigation into a series of crashes involving autopilot. The agency will keep the investigation open while it monitors the of Tesla's over-the-air software fixes. Wedbush believes Tesla's decision to make the requested software update could clear a path for broader acceptance. However, investing group leader Jonathan Weber warned that the indirect costs of the recall, such as brand damage, could be significant. That's the big thing, right? It's really your name at the end of the day. To kind of put things in perspective, and I'll have a reel dropping on this later today, but it's really just a software update that they're going to release for Tesla. It's not like a normal car recall where they have to call, all the cars back in and there's all this hullabaloo. Like it's one of those things where it's like your iPhone getting an update. You receive the update to the Tesla, and that hopefully fixes the problem. It is just crazy coincidental timing given the movie that was released over the weekend. Great movie, by the way. Everybody to watch. If you don't know which one I'm talking about, just check out the reel from today that should be dropping here. In terms of tech news, FTC probe Adobe shares fell around 7%. Extended hours traded on Wednesday after the Photoshop maker issued weaker than expected outlook for the coming year, despite its Q4 results. Again, outlook, guidance, all of that so much more important than the results that you get for earnings. Despite Q4 results topping estimates on account of strong performance in its digital media segment, particularly Creative Cloud. Adobe also disclosed that it was being probed by the Federal Trade Commission over its subscription practices. Yes, I was just about to say this. Oh my gosh, they are so annoying and schemy at Adobe. The company said its practices comply with the law, and it is working with the government agency about a possible settlement or resolution on the matter. This could involve significant monetary costs and could have a material impact on financial results, Adobe warned. Yes, if there is a class action lawsuit, let me get in. Adobe. So this is what Adobe does, right? And I'm one of those people that I'll get a free trial. And then a lot of times I'll put it in my calendar, right? Put it in my calendar, put a reminder, cancel this free trial, cancel this free trial. And I guess I was just busy. I don't know what happened, but I had a free trial of Adobe something. maybe it was like Lightroom. It was some video editing software that like my editing team uses. And I was like, oh, let me take a look at this, see what's up. And basically, you cannot, if you look to cancel the subscription, you have to pay for all of the months that the subscription would have been for if you didn't cancel. So like let's say that it's 25 bucks a month, and I go to just started, then you'd have to pay that 11 rest of the 11 months up front in order to cancel, which I just thought was crazy. I was like, this has to be like predatory practices. And it's insane. I don't know if any of you have dealt with the same thing. Maybe throw it forward in the chat if you have, but Adobe, shame on you, right? And at the end of the day, it is what it is. Whatever. I'm gonna pay because like, what am I gonna see here with something that I don't use? But it's just like it's crazy that you could say, hey, if you want to cancel this sub, you have got to pay me for all the time you would have been a part of this sub moving forward. That's ridiculous. That is absolutely ridiculous. So yeah, I just thought that was insane. So yeah, Sharon, look, we need to rise up and be part of this suit, right? Where's the Cochran firm? Let me get. If you guys are in the DMV, you always see all the Mike Slocum buses. I need Mike Slocum on the case right now because Adobe is taking advantage and using predatory practices. So yeah, you know what? I hope you do get pro Adobe because that was ridiculous. In terms of healthcare news, dim outlook. Pfizer shares reached a new 52-week low on Wednesday after the COVID-19 vaccine maker set its 2024 outlook below expectations, dragging its peers, including Moderna and Novavax, as well as its partner BioNTech. Pfizer expects its revenue to reach $58.5 billion to $61.5 billion in 2024, which includes about $8 billion from its, VID treatments and a $3.1 billion contribution from newly acquired Seagen, while JP Morgan said the COVID sales, I said it. It's like advised to not even say that anymore over like streams and stuff because it just gets like oppressed and all this stuff. So just a taboo word to even say, which is crazy. JP Morgan said the COVID sales forecast likely represents a floor for 2024 sales. So, I mean, that's really all they got. So investing group leader Stone Fox Capital said Pfizer, quote, will no longer have a strong COVID profit machine to help repay debt from the Seagen deal. So they went out, right? They're making a bunch of money from, the virus, and then they buy Seagen, another company. They financed it with debt, and now there's kind of fear that they won't be able to pay back that debt because they're no longer making money from the virus, right? So we'll see Pfizer, but yeah, Pfizer was taking a load off yesterday. There were a lot of people piling into that. In terms of today's markets, looking mostly green here in Asia. Japan down 0.7, Hong Kong up 1.1%, China down 0.3, India up 1.3. In Europe, the FTSE in London up 2.2%, Paris up 1.3, Frankfurt up 0.7%, Dow up 0.3, S&P up 0.3, Nasdaq up 0.4. Crude oil up 1.9%, gold up 2.6, Bitcoin up 4.6% to 43K. Then you've got initial jobless claims at 8:30 a.m. Those dropped. Really the biggest things that we got going on here this morning in terms of data. So I'll finish up with our rapid fire stock news rundown. Apple notches record closing high amid market rally. Berkshire boosts Oxy stake again after Crown Rock deal. Might be worth looking back at these oil tickers since those have been getting absolutely, beat down, back alley beat down the past few sessions. They might start showing some life here. Bitcoin erases week's losses as FASB rules may beef up adoption. U.S. Steel ticker X gains after multiple bids above $40 a share. GM's Cruise shakes up management in effort to rebuild trust. SEC now requires more treasury trades to be centrally cleared. Farfetch ticker FTCH in talks with Apollo ticker APO for emergency funding. Can Alibaba regain its crown as China's e-commerce king? Etsy fall after announcing restructuring moves and job cuts, and Mattel's American Girl is heading to the big screen. I don't know if you guys know about American Girl dolls. My sister used to love those dolls. I didn't know if they were still a thing, but I feel like with the success of the Barbie movie and Mattel bringing a bunch of their characters to the big screen, American Girl was probably like, hey, we want to slice this pie too. And they decided to hop in on it as well. But guys, that's it. That'll wrap us up. Put a bow on it. Take us out for this morning's pre-market prep session. Again, let's be eyes wide open for opportunities. making sure that we're available to take advantage of them as they come, right? Each and every market day won't be easy, right? Certain conditions will be tougher. When you get up here around all-time highs and all these things are going on, you don't have many anchors for price action, right? When it comes to, okay, well, where's the next spot? Where's this? Where's that? Just remain patient, understand that it is, a marathon and not a sprint. Take advantage of the opportunities that come to you, and recognize that you either win or you learn, but there's no losing unless you give up. So don't give up, whether it's in work, right, which can get crazy during the holiday times, whether it's with your family, which can get crazy during the holiday times, right? You got that one family member that's sending you 30 different gifts, right? And you're like, dude, I already got you a gift, right? Or it's like, why have you sent me 5 things, and then I know I'm gonna get socks from you, right? That type of thing can stress you out. But at the end of the day, just recognize that that's not what the season is about, right? Try and operate and pray for divine patience, divine grace, right? And just operate in that throughout this stressful, right? Can be quite stressful. But reach out to those that you love, those that you trust, those you can talk to, air that out, talk to a therapist. That helps also. Just make sure you're on the up and up during this holiday season. So I'm excited to finish this week out strong. Let's see what the rest of the week has for us. And without further ado, guys, let's make it a great day in the market. I'll see you back here tomorrow for our last Premarket Prep session of the week. Have a good one.